Good afternoon, guys. Welcome back to another Chart Nerd TA video. Today we're going to be covering Algorand against USD on the weekly time frame, and I'm just going to go through certain areas of support and resistance. And after all, that's what technical analysis is. You break through resistance, you're looking for an uptrend. If you lose support, you're looking for a downtrend, and we can measure them through different patterns and through time in the chart. So what I'm looking at here for Algorand is we was monitoring this in the past, I think, for Algo, and I was saying that you're creating something here called a right-angled broadening wedge, where you're putting in higher highs over a period of time and holding a consistent level of support. Now, what happened is this is a bearish pattern, okay, and once you lose that support, which Algorand did, you have a technical target to the downside. Okay, so that technical target, I do believe, was met. So how we measure that is we take the top from the highest point in regards to resistance, going down to the lowest point there. You can see that Algorand came down, and well, if we go from, actually, we're going to go from the wick, from the actual high. You can see that Algorand did come down and actually meet the technical target that it was looking to meet. Okay, so for me at the moment, this is why we are seeing this relief right now. But what we've done at the moment is bounce off of this technical target of this right angle broadening wedge. Okay, so we lost support, we met the technical target, and right now we've rallied right back up towards the previous support line and turned it to resistance. So to see continuation here, we need to see Algorand get back above 27 cents here on the weekly, I do believe, start to close and hold above that, and this is where we could start to see some further continuation and a retracement back to this high, I do think, here for Algorand that we saw in October last year. So right now it's literally a game of support and resistance. We're currently running into previous support and turning it into resistance. You can see we've had a few weeks up here where we're coiling up and we're looking for a certain level. We're looking to either break down or to hold support here. So if we zoom in a little bit, you can see here on the weekly that you've got this sort of ascending support right now. And if we can sort of coil up and hold this support and start to get back above this previous previous support, and actually get back above 27 cents, I think that's when you're looking for a long back up to these highs for Algorand here. Once we do start to close above this resistance line. Okay, but you know, we need to look at alternatives. If we are running into previous support and meeting it as resistance, we could potentially come for a pullback. So where could we look for a higher level of support here for Algo? Well, we can get a fib on from this local high, retracing back down to our lows in December, and you can see that currently speaking, what we're holding right now is the 382 at 23 cents. So you can see we've had a few wicks down here at 23 cents, and we're holding that as support. If we do start to see strong rejection off of this previous support that we're turning into resistance right now, and do start to come down and lose the 382, my optimal areas would be the golden ratio between 21 and 20 cents to get back involved, because this could be an impulsive wave one. Right now we're meeting resistance that was previous support, we're turning it to resistance, and we're potentially coming back for a larger correction here down to 20 cents. And I've shown you on the daily time frame, I think it is, in previous videos, that 20 cent mark is 20 to 21 cent mark is my retracement zone. And why is that? Because on the daily we had this rising channel that we lost support of, and we confirmed it as resistance. And I said what tends to happen is when you lose this channel, when you start losing this channel here of support and confirming it as resistance, you tend to retrace back down towards where you form that channel, and that sits right at that 20 cent mark, okay, 20.5. so on the weekly time frame, that also ties up, we've said before, I believe it ties up with the 0618 on this retracement. So right now I think this is an impulsive wave one. Potentially if we lose the 382 at 23 cents, I do think we're looking for an ABC potentially down towards 20 cents for a level of support where we can start to coil up and reattack this 27.30 cent high that we're meeting as resistance right now. So we do need, I think this is what the target is. I do think Algorand is trying to pull back to this target. Right now I do think we could also see some relief. Because if you look at the daily chart here, you can see we've got this key level of support as well that we was forming here for Algo of around 23 cents. And if we do get the bounce off that, I do think we could see some sort of relief. But I think potentially what you've got here is a wave one, a wave two. This is potentially an A, a B, a C of a wave three, where we lose support, hit our heads on this 23 cents, and get the wave five back down to this 20 to confirm our wave two correction, okay, on the daily time frame. So again, right now we are a bit oversold in the stock RSI. As I've said, I do think we could see some sort of relief from this zone, but I would expect a lower high to be created and for us to come down, lose 23 cents, hit our heads on it, and then retrace back to this 20 before we actually get the next opportunity to retest these local highs here at 27 cents. So that's my little takeaway for Algorand today. Again, on the weekly time frame, why I think we could also potentially come back to that 20 cent mark and be rejected from this previous high that we held as support and now we've turned into resistance. Why I think we've got a stronger rejection is because we're a bit overbought on the weekly here. You know, the more you zoom out, the more reliable these indicators can be. The stock RSI on the weekly is a bit overbought and has had a death cross on it. So I would expect some sort of retaliation from that, a pullback, and then a correction, as I've said, back down to that 0.618. And if you do bounce off that and start to tackle out of this level of resistance that we're currently running into, you can see you're forming an ascending triangle over a longer period of time and literally just building a structural base before a breakout. Okay, so to see that, we have to see the pullback here. Okay, if we run into resistance right now at this 27 cent mark, we have to see the pullback to 20 cents, hold it as support, attack it, build up a structural base, ascending triangle, break above 27 cents, and that's when your opportunity is to go long back up to previous highs that we've currently fell from. Okay, so it's literally a game of support and resistance. Tackle above 27 cents, we go long up to 45. Okay, but if we come back and fail to hold this ascending level of support and the 0.618 at 20 cents, I would be looking to retrace back down to the lows for Algorand of where we came from in December. So it's a game of support and resistance, guys. Okay, I hope you enjoyed the content today. If you did, please do like, comment, and subscribe. Hit that notification bell for my next videos. From Chart Nerd TA. Take care, guys. Peace out.